Lowe's is currently trading at $208 a share, and with earnings around the corner, is this the right time to invest in this company? What we're going to be doing today is looking at the most recent financials of Lowe's, then taking it to my stock valuation spreadsheet using discounted free cash flow models and the Buffer-Graham intrinsic value model to see if this stock is a buy or a sell in 2022. Then finally, we're going to be looking at some technical analysis for those people who are interested in looking at that. So quickly, what has Lowe's stock price been doing over the last year? Well, it is up 7.5% over the last year. And if we compare that to the broader market, it is most certainly beaten the market 7.5%, where the market is down 4%. But if we go from the start of the crash or the most recent negative run in the market, you can see Lowe's is down 18% to the market's 10%. It was down at its bottom price at around about the end of June and has had a strong 20% increase since that date. So let's get into my summaries sheet. Lowe's currently has a market cap of 133 billion, share price at 208, 52-week low at 170, 52-week high of 263. It pays a massive 2.02% dividend, and the ex-dividend date, which is if you want the to be paid the dividend, buy before the 18th of October. So before we get into my first steps, please give a like on the video and give a comment down below on what stock you want me to do next. So firstly, what we like to do is check if the P/E ratio is less than the market, and Lowe has a P/E ratio of 16.96, which is lower than the market average of 21.17. If we go to this website here, you can see this is the P/E ratio average over the last 120 years, and you can see currently it's on a bit of a downswing at 20.17%. So that is a good start for Lowe's. Next, you want to see if the revenue has been increasing over the last few years, and the revenue has gone from 71.3 billion to 96.2. Now let's have a look at Yahoo Finance and see how this has changed. 71.3, 72.1, 89.5, 96.2, and then the trailing 12 months is 95.4. So revenue is steadily increasing, and analysts do expect it to increase over the next 2 years as well. We'll be talking about that in a second. Next, are they able to generate more profit from this revenue? And yes, you can see in that same time 2.3 billion to 8.4. And if we go down to this line here, this is the net income to common stockholder, 2.3, 4.2, a bit of a jump up there to 5.8, and then another massive jump up to 8.4, and it's sort of leveled off over the trailing 12 months, but still increasing, which is what we like to see. Next, we want to see if Lowe's are buying back their shares or issuing more shares, and they've gone from 811 million to 696. Now, why is this important? Well, if you own one share of Lowe's and there are 10 shares, you own 10% of that company, you have 10% of everything shared amongst you. If Lowe's then issue more shares, they issue another 10, they would have 20, your stake would drop from 10 to 5%. Now, if they bought back those shares and then bought back some more, this would increase your relative ownership in the company, and you would have a larger share of these profits. So that is what we like to see for these type of companies, issuing buybacks. And finally, is the free cash flow increasing? Yes, it is 5 billion to 8.2. If we go back and have a look at the cash flow page on Yahoo Finance, you can see that it has been pretty choppy, to be fair. 5 billion in 2019, a low year in the pandemic year, 2.8 billion, up to an all-time high of 9.2, 8.2, and then the trailing 12 months, 6.8. So it'll be interesting to see what happens with earnings, but as it currently stands, it is decreasing, which would be a negative, and we would have to take that into account in our discounted free cash flow model. But overall, I would say that this is looking a pretty solid stock. 5 of my checks have passed. Free cash flow ratio, market cap divided by free cash flow is 16.1. And the total dividend they pay is 2.6 billion. So that is a very safe dividend for those who are worried about that. And this is a big dividend they pay, but it is definitely safe. Next, we're going to look at my discounted free cash flow models and my Buffer-Graham intrinsic value model. We calculate the future free cash flows, discount them at today's value, and this gives a terminal value of the company. So what does this give us as a value? $276.15 a share, which means it's trading at a pretty massive discount currently. Now, what I do is I look at the averages. So we see we've got the revenue growth rate based on analyst estimates in the 2 coming years. 97.6 billion and 98.9, which is a slower increase. So I think we're going to bring this number down a little bit because 2020 had such a big increase. So let's bring this down to 3%, see how that affects it. It's brought it down from 270 to 260. Next, we're going to have a look at the net income margins. As we saw, they have been able to generate more profit from their revenue, but 6.1%, I think this is a pretty fair number. It's in line with all those, so we're not going to change that. And then finally, the net income to free cash flow rate, 134%. You can see it was 216, 65, 158, and 97%, so pretty all over the place. This is estimating negative free cash flows in 22, sorry, not negative free cash flows, decreasing free cash flows, nowhere near negative. This company has a lot of free cash flow, and that still has it fairly valid. So if you were to say that they are going to continue at sort of that 2020 rate, 160%, which would be increasing free cash flows, that puts it over a $300 stock. But I'd say that's a little bit on the bullish side. So let's bring it back a little bit, 260. Discounted free cash flow model really likes this stock. Next, we're going to look at the Buffett Graham intrinsic value. This takes earnings per share, expected growth rate, and AAA bond yield. So if we go to Yahoo Finance again, we can see that the next 5-year growth analysts estimating is around about 9.4%. And we have the AAA rating of the bond yield, which is currently 4.06. You can see it shot up massively, hit highs, well not highs, recent highs of about 4.22, but has dropped down a little bit. This is the sort of lowest rate it's been consistently, but since the pandemic it's shot up, so it's good that you check this and update it. So what does that give us as a Buffett Graham intrinsic value based on this expected growth and earnings per share? $360 a share with a Graham price of 272. So discounted free cash flow likes the stock. Graham price even likes it a little bit more. The Graham price is the fair value of the Buffett Graham intrinsic value with a margin of safety. So both of the models are saying it's a buy. Finally, what are analysts saying? On the high side in the next 12 months, 300, low side 190, and putting about an average at 229. So the models are saying it's a buy, and analysts overall are saying this stock is a buy. Let's just quickly have a look at some technicals. I'm just going to get the moving averages. We have a 50-day, 100-day, and 200-day. And what are we seeing in the short term? Well, you can see the price is breaking through the shorter moving averages and about to hit and cross the 200-day, which is the longer moving average. So very bearish signs on there. This was the death cross back in March. These would have been your buying signals, and right now the price would have been a buying signal back in July because of this bullish movement. Next, I'm going to look at the RSI, which is the relative strength index. Is the stock in overbought or oversold regions? And you can see from the RSI, it is trending towards overbought, but in the last 12 months, you can see it has crossed this line, and this was when it was at its pretty much peak at about 260. So the stock does have a little bit more room to go in terms of RSI. And finally, MACD, moving average, convergence, divergence. What's the trend? And no surprise here, very bullish trend. Two things we're looking at here. The MACD and the signal line have crossed, but then also they have crossed the zero line. So this is a very bullish momentum at the minute. Ideally, you would have bought back at this point here, but you can see it's still going up. And when we had this big move back in the back end of 21, this once again has some more momentum to go. So technicals are pretty strong, and the fundamentals, as we can see, are pretty strong, and the models really like the stock as well. Right, guys, please give a like on the video if you enjoyed it, subscribe if you're not already, and I'll catch you guys next time.